Welcome back to Validated. Today we are joined, first off, special guest, Tori. Tori, welcome.
Hi, thank you for having me.
Thanks for joining us today. I should say, for those tuning in and saw the episode title, this is a little different. Tori is co-hosting today, and we're going to be chatting with Austin Campbell in a little bit, but also chatting about just tech, news, crypto, the world, Bigfoot. We'll see where it goes.
I've told Austin that Validated needs to be less technical and more fun.
So we brought Tori to have fun. Tell the people a little bit about yourself besides the fact that you are Chairman Birb Bernake on Twitter.
That's true. I am Chairman Birb Bernake on the internet. And one of the things I can say about that is people come up to me all the time and go, "You're Birb." And I go, "Yes." And I don't know what to do with that. So I think I'm going to use this as my platform to say, you have to give me more information than that. And people should be way cooler about that than they are. I've been in and out of crypto since 2013. And I have had every single job in crypto that you can have except for developer. I've done everything that you could call non-technical. I've been a marketer. I've been a BD person. I've been ops. I've been everything other than the technical person in the room.
And you are also known as, I believe, the originator of the term Chinese peptides.
I don't want to take full credit for it, but I think I will take full credit for exploding it in some very interesting ways. A lot of what I like to do is around mimetic R&D, if you will, and how to make ideas spread and how to incept an idea into someone else's mind. And a lot of my best work is actually things that were other people's ideas originally, and I magnified in a different or interesting way, and everyone kind of caught on from that. So the full term was actually originally gray market Chinese peptides. And that was the term that was going around crypto for a while and going around Twitter, and the AI guys that got in on it. Especially my friend Atlas, who's Creatine Cycle. He's the other person that I will shout out as being a really big part of this one. He and I have had many debates about it. He is also much more on the anti side, and I'm on the pro side of the peptide debate. But one of the things that specifically kind of pushed the gray market Chinese peptides into the zeitgeist was that I threw the Chinese peptide rave back in December. And a lot of my branding for it was really just, what the heck is a Chinese peptide rave? And to that, I have to say, you have to read the New York Times article about it.
Do you think the peptide cycle is like where are we in the peptide cycle? Because I feel like there was this thing that happened maybe 2.5 years ago where people were like, you don't understand GLP-1s. These are the most incredible class of drugs since mRNA things have come on the market. But then we started to see all these fairly credible theories that to me seemed like they never quite played out. Like, GLP-1s are going to kill the fast food industry. They're going to kill casinos. They're going to kill free-to-play games where it's anything where 10% of your users are responsible for 90% of your revenue is you're kind of just gambling, hacking someone, or some type of mental illness is stepping in to provide a profit margin. And it feels like none of that happened. And I'm not sure if are we just too early on the peptide thing? Is this kind of like how ChatGPT 4 was not transformative, but 5.5 was? Or is the peptide thing a little overblown?
I don't think it's overblown. I think it's actually just still very early. I've thought it's early for a while. And I think the GLP-1s, you're right, they were the first ones that came out that people were like, oh my God, this is incredible. This is life-changing medicine. And as someone that took them and lost 33% of my body weight in a year and a half, yeah, they are life-changing technology. But what they've also really done is explode out this other class of what we're calling peptides as a catch-all term. And I want to be specific about something here, actually. Peptides doesn't really mean anything. That's a catch-all term for multiple types of...
Give me some aminos.
Right. All a peptide is a chain of amino acids. And this is kind of important because when they're under 40, they're a peptide. If they're over 39, at 40, they become a biologic. So some of them have patent issues because they're technically the same length as things that are naturally occurring in your body. But yeah, back to your original question about the GLP-1s. I do think it's just that market penetration hasn't gotten that deep yet. Something like 1 in 10 Americans has taken a GLP-1. And we don't quite have enough data or a long enough timeline to see what the effect of industry is going to be. there are all these studies coming out showing that in clinical data, like it's helping with people's addiction. It's helping with impulse control. It's helping with a lot of things that have nothing to do with just like how much you eat. I know for me specifically, it had a lot to do with changing a lot for me that had nothing to do with how I was eating. For example, even from the first shot, my resting heart rate dropped 10 beats a minute before I lost any weight. Yeah.
That's so like a 15% drop.
Yeah. I'm not doing the math on that to figure out what that means. No.
But a lot.
Your brain is incredible tech. It can regulate how many breaths you take a second, how much you're breathing. It regulates all sorts of autonomic things that you don't even think about on a daily basis. It regulates your digestion. It's regulating, your body temperature. And you're going to tell me that hunger is manual? I don't believe that's true. I just don't believe that's true. I believe that your body should be able to regulate your amount of hunger, should be able to regulate, your body fat percentage, like at a set weight, and be like, okay, well, stop eating. Your body has enough fat on it. And people argue things about like evolution hasn't caught up, this, that, the other, but they have a fair point there, I think. But also, and this is not conspiracy. I talk a lot about things that are conspiracy and kind of out there, but this one's not conspiracy. This is just true. There are food scientists on record in America. They exist. They're paid by Doritos. They're paid by Nestle. They're paid by everybody. And their whole job is to figure out how to make your food hyperpalatable. There's an article that I was reading where they were talking about how they learned that through these studies, you would eat more chips if they crunched louder. So what the food scientists did is turned up the crunch volume, because that's a thing they can manipulate. So now, of course, you're going to eat more because the crunch is ultra satisfying. And there's all these things that like your body has to fight against. So I think it's a brain problem rather than like a body problem. And I don't think the cure is willpower.
I love that.
Because if a shot can fix it, then it's not willpower's problem.
Yeah, so I like the stuff you're talking about peptides, though, because I think, like, to me, we've had this sort of like, for my entire life, there's been these like sci-fi elements of like, oh, what if things were different in the future? And like one of the big areas that it's like the premise of a lot of sci-fi, but it's also just the same. Welcome to, the Foundation books. Right. When you look at this stuff, it is the last area that has not been disintermediated yet. Like we see what happened with technology, and it went from like a mainframe to like things you have in your house to AI to Claude bots to like this entire process has been about removing intermediaries from your relationship with the technology. This is the Bitcoin story. This is the Zcash story. This is the Solana story. It's this whole thing about how do we get closer to the real thing and get fewer middlemen in the process. And it feels like biology is like, for the first time, maybe with gray market Chinese peptides, we're like starting to get a semblance of what that might look like when you have sort of, I always thought about like biology would be like computer science if like you needed like 12 years of schooling to be allowed to code, and then like a lawyer had to review every Git commit.
It's worse than that. The lawyer can also look at your Git commit and tell you, no, that's wrong, but not tell you why, and then send you back and like tell you, please fix, please fix, please fix. Or maybe if you just did this, and then like none of their suggestions make any sense.
Right. And then your unit tests are run on a bunch of like randos from like Nebraska
who have nothing in common with you.
Yes.
Yeah, I think biology is a really exciting place. Technology in general is getting really exciting. And I think what's interesting here is like what all of this technology is really enabling is, maybe this is a little bit transhumanist of me, but like I think we're going to be able to evolve past our bodies. And it is really sci-fi, especially from the angle that like you can now program your body, you can hack your body, you can do all these things. Like biohacking is getting big, all of this stuff. Like I know you're laughing a little bit, but it is true that like a lot of the things that changed for me on tirzepatide had nothing to do with eating. They had everything to do with personality. So like now that we're learning we can signal certain things and it gives you personality change, a lot of my question is like how much of personality is just metabolic? Which is like a very philosophical question and a little bit outside the scope of the podcast. But I think what you and I are really getting at here is that there's a whole wide world of cool tech to explore.
If you think your emotions cannot be programmed, And like,
Then you've never taken an SSRI.
yes, exactly. Like we have been in the field of professionally programming emotion since at least 1920. Just not on a granular enough scale to make it interesting.
And a lot of things come out of past dependency and folklore and folk wisdom. Like Tylenol is from willow bark, which no one really knew why it worked. We still actually don't know why Tylenol works. We just know where it comes from and that it does help. So there's all these things. I think you're right. Disintermediation is maybe the story here of like, that is the Bitcoin story of, you know, getting rid of the middlemen, and now maybe medicine, and now biotechnology. And even in technology, we're getting rid of middlemen more and more, and just seeing like what is enabled by the world around us now is so cool.
It really is. And I think we actually do have like a perfect guest to go through and talk about this entire weird world of intersection of technology and regulation and government and control systems and lack of control systems and trust and risk and verification and the future of money. So today I'm very excited to say we are chatting with Austin Campbell all about the crazy world of stablecoins, risk management, and what he's been up to the last few years.
Thanks for adding me to this WebEx.
This could have been an email.
How you doing?
I'm doing well.
So this is why we brought you on today, to talk about conferencing systems and to rank them in terms of functionality. But to get into actually why we brought you on today, Austin, why don't you give a quick intro and background to yourself before we get into it here?
Oh boy. All right, let's do this quickly. So my background is kind of some overlapping layers of things that make me very difficult for a lot of people to deal with, by which I mean I spent a long time in traditional finance, and some of the gnarly stuff that people don't normally work with. Everybody at home who doesn't work in the industry thinks of things like stocks, and I was in the dungeon working in things like repo trading and like stable value funds. So I know all the grotesque inner workings of the financial system. I've been in crypto for a while. I helped build one of the early Bitcoin custodians. I ran the reserves for the third largest stablecoin in the world, the only one that went from existing to zero without losing anybody's money. And now I also do a lot of teaching and advisory work. So I have the misfortune of having to take complex topics and try to figure out at least semi-entertaining ways to explain them to normal human beings so that they will possibly understand the things we are doing in crypto and or finance.
I have a general little story thing I'd kind of set up if you want me to read that too, Austin.
Please.
It's a little silly, it's a little dramatic, but I figured you guys would appreciate it. And so what I had was excuse me. Somewhere right now, there's a woman in Buenos Aires getting paid, not in pesos, because her pesos lose value when she sleeps. She's getting paid in dollars, and not like stacks of dollars she can hold in her hands, but dollars on a phone that no bank really gave her permission to have, or no government really signed off on. She didn't wait for anyone to like build her a way out of a currency eating her savings. She found one. Now, Austin didn't just watch this happen. He built a machine to help. Austin ran the reserves behind one of the biggest dollar tokens on earth, helped build PayPal's, and has spent a decade saying the quiet part out loud, which is that the banks are a cartel and there are ways out. He's a rare guy who'll do every bit of it by the rules and still scare the hell out of the incumbents. So Austin, first question for you. What did you build before anyone said you were allowed to build things?
Oh, God. Are we going back to my teenage day where the answer is like firecrackers / bombs in the
Yes,
garage?
absolutely. I love weapons.
So totally may have blown up some potted plants. We'll leave that aside.
I mean, or
No,
I can go into the question that came after it if you want, if you don't like that question.
No. I would say in terms of building things that people don't give you permission for, that has kind of been the course of my entire career, especially in the context of running into burning buildings where the previous thing there has burned down and having to rebuild it. One of the things that nobody had really thought a lot about until maybe early 2000s is there's this gnarly market most people don't think of, but actually is kind of essential to the functioning of the world called reinsurance, which I will describe for you as insurance for insurance companies, right? That is to say, when a giant hurricane or fire or earthquake happens, the insurance company that sold you your policy is bankrupt because all of their policies just exploded at once. And so there's another layer behind them called reinsurance, and that historically was a very cartel-like business. We're going to see a theme emerging here. That was dominated by people like a couple of rich dudes in Germany and Switzerland and Warren Buffett and Charlie Munger, right? Because a lot of where Berkshire made their money was reinsurance. And that was a market ripe for disruption. So one of the things we tinkered with in the early 2000s, and these were not really a thing that existed before, nobody gave you permission, was, hold on, what if, instead of relying on a cartel of rich people, we lock a bunch of money in a box and say that's the money if something goes wrong, and then sell people protection based on that. That thing is called a catastrophe bond, right? Which is not a bond that itself is a catastrophe, but rather is a bond that protects you against catastrophes. And so there's probably tens of billions of those around, but I started building those in the early 2000s when I was still in the reinsurance space. And not only did nobody give you permission, a lot of people were very angry about it at the time. And usually you're going to find if you're building something that's useful, it will make people angry.
It's funny because like at the end of the day, like it's very similar to a stablecoin business where it's like in some ways what you're doing is a roll of the dice every day that the protocol doesn't get hacked and there isn't some sort of major thing that happens. Yeah, but a catastrophe. But in exchange, you get to play with $50 billion. And as long as you mostly keep it in mostly things that are mostly cash, like it's a pretty good business.
And you've actually kind of hit on part of why I was dragged into stablecoins in the first place, which is the risk profile of these things is at least related.
Yeah.
I would say in stablecoins, you're actually promising people stability. And so your job is to avoid risk at all costs if you know what you're doing. And in fact, like one piece of advice I give people is financial innovation in stablecoins is usually a red flag, right? Like the innovation should be in the technology, not the reserves. If you're innovating in the reserves, it's probably not actually stable.
Thank you, Celsius.
I mean, Celsius, Terraform Labs, Iron, if anybody remembers that thing before Terra was there. Like there's a long history of
At
experimentation.
least Terra never pretended they had any real asset anywhere.
Correct. And by the way, for those of you listening at home in the current era, the AI data center debt-backed stablecoin and the STRC-backed stablecoin will explode. Right. On a long enough timeline, those will die. So,
especially when they're valuing their H100s from a depreciation perspective at 6 years.
Also, wasn't STRC made with ChatGPT?
It almost doesn't matter how you're valuing them, though. Like this comes back to like, how do you keep a bank alive for the long run? And how do you have something like that stable? The number one thing you need to do is either just own treasuries or you need to have a deeply diversified set of things. So like if you really, hypothetically, wanted to run a diversified stablecoin, you should be buying little bits of all kinds of uncorrelated stuff with a margin of safety and holding extra capital against it. You will notice that what I just described is basically the bank regulatory regime.
So I'm curious, as you think about these things yourself, the easiest thing to do is to be a doomer, right? Risk management is in part makes you be a doomer. What keeps all of your money out of gold and Bitcoin? Or is it all in gold and Bitcoin?
It is not all in gold and Bitcoin. I actually have a pretty diversified portfolio. So I would say a couple of things. One, you need to understand what you're doing when you invest in things and what the purpose is. I am highly skeptical of risk and very averse to it when we're talking about cash stability products. If we're talking about a bank deposit, a stable coin, a money market fund, a stable value fund, that is something where I need to be institutionally paranoid because, like, if Tori is the owner of that, the deal I've made with her is give me your money and you will get at least the amount of money you gave me back, right? And if that is my investment purpose, the number one thing I need to do is protect principal. On the other hand, let's actually take the single most boring financial instrument known to man, Vanguard's total stock market index fund. What do? A stock exists, they buy it. That's basically almost the entirety of that rubric. Like, there's weights to how they do it, but guys, it's not much more complicated than what I just said. In that thing, you've made no promise of safety. You're telling people very specifically there may be very large drawdowns in this thing over time. See, for instance, 2008. And what we hope is that on average over time, we make money because essentially you're trying to be long the US economy or perhaps the global economy, depending which one of those you own. And that's been a pretty good bet historically. So for me, the question with risk that people often don't pause to ask is like, what is our investment mandate and what is our goal here? And then you need to set your risk tolerance appropriately, because you should be taking insane amounts of risk in venture capital portfolios and very little risk in a government money market fund. And then people should be buying them as appropriate. So like, no, I'm actually very like pro risk. To me, it's a question of representations and being the thing you purport to be.
Is that why you're not in gold?
I mean, I do own some gold.
I have a question. Do you own gold or do you own gold futures?
I actually own gold. I used to work at Paxos. There's a thing called PaxG, if people are familiar with that. That is allocated gold bars at the London Metal Exchange. So that is gold.
It always used to drive me crazy. One of the reasons everyone, when they're like, oh, I'm dooming it, I'm just buying gold, is they would go out and they would buy like futures or ETF. And I'm like, that's really not the same thing as owning gold. That's owning like price exposure to gold. But if something actually happens, good luck trying to collect on that.
I'm going to go the other way, though. I'm totally cool with people owning the futures, because if you're in the situation where things are so bad that you wanted to collect your physical gold, I actually would suggest you did not go hard enough. By which I mean, if we're at the world where everything is collapsing, you want to own guns, ammunition, canned food, and water.
And maybe some gasoline.
Because then you can go take somebody else's gold.
And also, you want to have physical possession of your gold, because I don't think like they're going to send a courier from London with like your bars.
No, but again, if the world is that bad, go look at historical analogs. Gold is also not the right thing to own. You want to own a monopoly on force.
Everybody's private monopoly on violence.
I mean, I'm just calling it like it is, right? And this is one of the funny things about investing, is there are a subset of tail cases that it's kind of not worth worrying about from an investing
100%.
standpoint. Because, I get this critique a lot, by the way, from the bank people on stablecoins. They're like, well, what if the U.S. Treasury defaults? And I'm like, well, all of your banks are gone too. So why are
then we have bigger problems?
Yes.
I had this exact conversation with a guy recently who was talking about kind of financial planning and sort of, oh, well, how do I pay for my mortgage if the U.S. goes into hyperinflation? I'm like, dude, you're set. You've got a fixed rate. Hyperinflation is the thing you should be rooting for if most of your net worth is in your home. Like, that is actually a pretty uncorrelated asset to inflation, because the price of your home will track with the inflation, but your mortgage is at a fixed rate.
Yes.
It creates some pretty perverse incentives in the long term.
So speaking of perverse incentives and a monopoly on violence, two questions I guess I could ask. One is that, Austin, when we started, I said something that you've been making the case that banking is a cartel. And I think you could expand on that for people that have never really heard it put that way. Or the other question I've got for you is that you said also you're one of the only people that's taken a stablecoin from like $20 billion to zero without losing anyone money or going to jail. Which story do you want to tell?
Let's start with the banks, because I think that's probably better education for people. So let's travel back in time to before even I was born. As we established earlier, I'm the oldest person on this podcast. Banks were largely not involved in day-to-day economic activity. If you rewind to like 1970, nobody is buying a sandwich by like using a bank. You're not writing a check. You're just going to the deli and you're giving them cash, okay? And even moderate purchases like, refrigerators or something of that sort, you're probably paying in cash. And the economy largely ran that way, and it worked fine. Over time, there was this creeping electronification of the payment system that was also paired with this sort of creeping expansion of like federal control over payment systems. And what it led to is us accidentally giving banks a monopoly on electronic payments in the United States. So previously, you needed a bank if you wanted to like buy a car or buy a house, but you did not need a bank to buy a coffee. Nowadays, it's actually surprisingly hard to buy a coffee without involving a bank. And so...
And sorry, can you just drill into that? Because I think a lot of people listening might just be like, what do you mean? I just use my credit card.
Right. Okay. So if you ever tap with a card, behind that card is a bank deposit somewhere, right? You have an account. There are deposits against that. They're going to take the deposits from your account and end up with them in the merchant's account. And that process can be anywhere from very simple, if you're at the same bank, to incredibly gnarly if you have to do a couple of hops. But the point is, a bank deposit is going from pocket A to pocket B, and it's bank deposits all the way down. Nobody shows up to the merchant with like, here is your cash, right? They are getting a bank deposit. And so what that means, and this sounds very weird, but to be allowed to buy coffee in the modern economy, you have to lend money to a real estate billionaire, right? Which is a very bizarre thing. But the reason I say that is that if you look at what banks actually do with the money you put in the bank, I want to be clear. They're going to hold themselves out as like, oh, we are the salt of the earth. We primarily lend for mortgages. We're letting people buy homes. Less than 20% of what banks do is mortgage lending. Right? You can go look at their balance sheets. You can see what they hold. You can see what they're doing with the bank deposits. The answer is that is not what they are doing. They are doing project loans. They are doing hedge fund lending. They are doing commercial real estate. They are doing asset-backed securities, right? And a lot of the stuff they retain is like credit card and home equity loans at very high interest rates, and query whether we even need those in the economy. So there's this very distorting effect of the way we built things because a lot of people who don't really want to be involved in this are trapped. And this gives banks cartel-like powers. I want to remind everybody, the risk-free rate in America has been 3 to 4% for a while now, and you are getting zero on your checking account, right? So they are kind of holding you hostage to be able to buy a coffee and taking all the money to pay themselves bonuses.
And you also put this to the test too and tried to live without a bank account for a while, right?
I mean, to be clear, I kept a bank account, but I tried to put as many things through the non-bank as possible. The answer is it's shockingly hard.
You're like the guy that did live by the Bible for a year.
Right, exactly. If you try to live in the modern economy where you're not making ACH payments to anybody, it is terrible. Right. And that also means not writing checks. Like I've either got to pay you by cash or by stable coins, right? Or in kind. And there are a ton of things that are just not set up to do that. Like, great example, I probably can't pay my taxes, right? Like the IRS is not going to let me show up at their building with cash.
Have you tried?
No, because the one group you don't fuck with on that is the IRS.
That's true. But isn't it, you know, because you see these all the time on the internet of people being like, I just didn't want to, whatever, I got some crazy ticket or whatever, and this is, you know, legal tender. So they go to the ticket, they got a ticket or something, like a parking ticket, and they pay it in like pennies and like wheelbarrows.
Right, but there's like a place to go to do that. I dare you to roll up at the IRS building in DC and even try to get in.
I did once get a ticket, like when I was in high school, and I was so annoyed. I grew up in like Amherst, Massachusetts. It's like a 30,000 person town. That I went to City Hall to pay my ticket with stamps.
Yeah.
Can you still do that in New York? I have a ticket I need to pay.
Okay.
You should be allowed to legally. I don't know.
Well, maybe this can be an episode on the road where we go with me to see if I can pay my MTA ticket in stamps. I got a ticket.
Did you get a ticket for?
It's worth a shot. Actually, the place where mostly this falls down, interestingly enough, is dealing with private vendors, none of whom accept cash. So, like, how do you pay for your internet or something like that? That starts getting tricky if you don't want to use a bank at all, because they're also going to give you a massive surcharge if you try to use some sort of card. They really want ACH.
Well, and the other side of it, too, is like an employer or something, right?
Depending on your employer. Some employers will pay you in stable coins if you work in crypto, but like when I was at JP Morgan, absolutely not, under no circumstances, right? And so, again, everybody is trapped in this world where it's like banks have a monopoly on payments that they were never intended to have. And so one of the things I've been a big proponent of is we need to do one of two things. One is give non-banks access to the payment system, or the other one is hammer banks back into the box that allowed them to exist this way to begin with, which is called Glass-Steagall.
Yes. I will also say, though, even in your stablecoin example, there's still a bank under the hood there.
There can be. There does not necessarily have to be. Nobody's had the courage to run a stablecoin that is backed by physical cash, but it is a thing that you could possibly do.
I love that idea.
If anyone's listening, that needs a startup. This is my request for startup.
Imagine the insurance premium on the warehouse where you put the cash.
We'll call it a central bank physical currency, and we'll force the Fed to give us vaulting capacity.
CBPC.
Yep.
And you often get in fights with the government. So you're used to it at this point. Parts of the government.
I have a very good relationship with many parts of the government because, like, advice for people in crypto. I do agree there have been some genuinely bad people in the regulatory space. See, like, Gary Gensler and some of his deputies. That was deeply unethical. A lot of them, however, are faced with an unsolvable problem and get blamed for things they are not in control of. Because if you're a regulator, you kind of have three problems. Problem number one, you are not writing the law. So if Congress writes something stupid down, you're kind of stuck with it. And even if you feel otherwise, you can't just not do the thing. So if I have, for instance, the 1940 Act that requires a ton of intermediaries and people invent a better disintermediated system, I don't technically have the authority to let them use it. And so this creates a very complicated situation. Two, regulators get blamed whenever anything goes wrong and they get ignored when it goes right. To that extent, they have the same public profile as plumbers, right? Like nobody cares until something breaks. And so you've got to understand these people get screamed at when things go wrong and they get ignored when things go right. And that if you want to have a better relationship with them, you should probably be nice to them most of the time because they are going to get screwed in the media no matter what. The last part is they don't get paid. You could actually go look online at what people at the CFTC or the SEC get paid. That is public information. And let me tell you, it is shockingly low. So a lot of these people are doing this to try to help the world because let me tell you, making 90 grand in New York when you are like a relatively talented lawyer is not a thing you would do if you're into money. So we should also probably, quite frankly, pay them a hell of a lot more and hold them to higher standards. But in the meantime, please be sympathetic. These people are broke.
There's kind of a perverse incentive there, too, for them. When they're not paid well by the government, it makes a lot more sense to go into private. And so you just get a giant talent drain.
And that has been a constant problem. We have this critique over and over of the revolving door and why do these people keep going into private sector? And it's like, because you're paying them poverty wages.
What else are they going to do?
Yeah. Like, have you heard of food? They would like to have that.
My favorite, like, this is related, like we get mad at there being wealthy people in Congress. And it's like, well, we like Congress should be wealthy. No problem with Congress being a $2 million a year job.
It probably should be. Another related thought, if you look at how Congress was originally structured, is the Senate was not elected. It was appointed by state legislatures. And I think we have
a U.S. 17th Amendment truther as well?
We should repeal it.
There are so many of you in crypto.
We should repeal it. I had this view long before I got to crypto because the whole point of the House and the Senate was to have different decision-making frameworks. And when you standardize them, politics both got broken and got deeply federalized. Because let me tell you, when you are the senator from Rhode Island who happens to be a Democrat, and if you give Rhode Island's power away, you're going to get recalled. That is a very different decision-making framework than I am the Democratic senator from Rhode Island.
100%. I am completely on board with this. Expand the House by probably about 5x and repeal the 17th Amendment. Do it in one big, beautiful constitutional amendment.
Do you think we could actually get a constitutional amendment passed right now?
Okay, to expand the House, my answer might be yes.
Okay.
Because that's just more seats for politicians, which makes it more likely that they keep their jobs. I'm actually not totally certain that expanding the House would be out of bounds. That is possible. Do we think we could move the Senate back to being remove being popularly elected and return to state appointments? The answer there is probably only if the states start agitating about that, because that's the pathway. The senators won't want that themselves, given the current crop. But on the flip side of the coin, you could probably override that if the states get angry enough, because they control local election laws and could really knock a lot of those senators out anyways. So then it's damned if you do, damned if you don't.
So what I'm hearing is that we should put prediction markets on this.
Actually, what I would suggest to the crypto people is that your lobbying efforts have been very niche focused on your industry, but you would actually do much better pushing a lot of good governance proposals that would additionally help you a lot.
Do you think that's what we're seeing in AI right now?
I think what we're seeing in
That
AI
sigh.
right now is a lot of people who are very out of touch with how politics works.
I'm sure I'm going to get all sorts of opinion for this one, but it seems to me that Anthropic in particular is really running the FTX playbook.
I mean, there are
That's a
EA
take.
people
It's
on
a
both
take.
sides of that. And I would say one of the characteristics you tend to get with that community is that they are incredibly high on their own supply and also have no idea how reality works. Because they
Yes,
seem
I've met
pathologically,
rationalists before.
yeah, they seem pathologically unwilling to go outside and talk to normal people. So let me propose from an outsider's perspective, if you run around saying my model is existentially threatening and could destroy the financial system and the US economy, everybody's going to lose their jobs, we're going to be in control of everything and we can hack everything. And then you also say, yo, the guardrails aren't a big deal. Why are you guys so upset? Why is this a problem? You are likely to get trucked by the government, right? Like they've taken a very, I think, inadvertently antagonistic and sort of paternalistic view of how things should run and just appointed themselves to be in charge while nobody else agreed with that. And unsurprisingly, they're getting exactly the reaction that you would expect. What Anthropic is doing is not much different than the cranks who go find an offshore oil platform and declare that they're running a micronation.
It's very, what is it, the EA, where it's, we know how to do this better than you do, and we have humanity's best interests at heart, so you should just let us run it.
The EA people remind me so much of the libertarians, which is to say all of your ideas are excellent in your little closed box of theory that has absolutely no resemblance to how the world actually works. And if you're not willing to adjust for that, you should be nowhere near the levers of power because you're just going to break stuff. Let me go down a rabbit hole here for a minute. One of the things you learn teaching is that most people don't have an understanding of the theory of mind of lots of other people out there.
Yes.
And this problem gets worse on two vectors. One that people are at least somewhat familiar with is intelligence, right? That is to say, if you're a 140 IQ person, you probably can't understand how a 120 IQ person thinks, much less an 80 IQ person. And so this is sort of the genesis of my constantly puking all over the crypto do your own research thing. I'm like, many of these people literally cannot. Right. And you're essentially arguing in favor of like scammers scalping people who are not sophisticated endlessly. But the other angle that people don't think about is call it core neurobiological structure, e.g. neurodivergence. Right. And one of the things you've got to understand is a subset of people are literal fucking psychopaths. Right. And so as you go down this, you have to build systems that account for the existence of people who are going to actively exploit the system for the maximum amount of gain for themselves and the maximum amount of pain for everybody else.
Thank you for the
And that's
segue
where
to
the
my next
EA
question.
people- What's that?
I said thank you for the segue to my next question.
Yes. But that's where the EA people often fail is they don't have like a theory of how do you deal with people who are actively opposed to your goals and will deliberately subvert them. And they regard that as a feature, not a bug.
Speaking of people who are going to actively exploit the system for the maximum of gain for themselves. And yes, I did pull up the recording to make sure that I got your explicit words right because it was so perfect. Prediction markets are tens of billions of dollars a month in volume now. And some of them are like settling on real economic data. And I think there's a really interesting thing happening here where like some of these markets, you could potentially front run the government's own numbers. What does that do to perverse incentives and to just the structure of government if, you can disrupt all sorts of things like jobs reports?
So I think there's two layers to this. One layer is the classic problem with insider trading, which is to
Is it
say,
insider trading if it's not a security?
No.
you can insider trade on non-securities. The theory of insider trading is actually misappropriation of private information and using that for personal profit. It's like a fiduciary problem. Now, the SEC can't come after you if it's not a security, but that doesn't stop like the DOJ, for instance. So
Would you rather have the SEC or the DOJ after you, be honest?
you would
SEC.
always rather have the SEC.
You'd always rather have the
Just
SEC.
reminder to everybody, the SEC cannot put you in jail. The DOJ can. That is a big difference.
Also, a reminder to everyone, the DOJ is much better funded.
And the people there are very talented. I know
Yes,
some.
it is the highest quality tier of people working in government except possibly like in the military.
So what we're saying is that insider trading on securities is better than insider trading on Polymarket.
No, because securities, you may just get both. The DOJ and SEC are not exclusive. You can get a yes and.
Yes.
What I would say, though, is that the first problem is just confidence in markets. Like, if I know somebody has access to this data and is trading on it in front of me, I'm just going to avoid that whole market, and that damages capital formation and price discovery. Like, it's one of those invisible taxes on a system that slowly over time degrades everything.
Okay, I want to push in on this a little bit because this is how the entire retail financial market is currently structured.
Yes, and you're probably aware that I have some complaints about how that works.
Could you complain about it?
I will complain about that momentarily. That is to say, I think it's fair play if these are all public actors finding public data and doing their own research to actually build a market. So if I'm at a hedge fund and I hired a bunch of people to go spy on all of Apple's suppliers legally, not illegally,
right?
And I gather all
just
that
count
information.
Trucks outside the factory door.
What's the difference between legal spying and illegal spying?
Legal spying would be, for instance, I had people wait outside the factory and count people coming in and out and tried to estimate the shipments. You're allowed to do that. Illegal spying would be I got people hired at that factory to steal information and give it to me, which they were not supposed to do.
Thank you.
Right. Okay. So I'm okay with legal efforts to make markets more efficient. But I think the problem that we have currently in markets is sort of twofold, which is one, if there's so much of that and retail people don't have access to it, at some point they should back away from the market because they're just getting scalped. And you can do that in one of two ways. One is just like literally don't put your money in the stock market. The other way is just own a passive index fund, because then all of that noise kind of goes past you and you're not trying to individually trade. But there are implications for things like governance and whatnot that have something to do with that too. I think we need reforms on, call it disclosure, trading activity, positions, etc. The second level of unfairness is there's probably a lot of genuinely unprosecuted insider trading in markets. I don't think our market surveillance regime is effective currently because the SEC is primarily using exchange-based data, which is not a great vector for detecting things. And you should be using like open source intelligence and social media-based data to try to track all these things down. And boy, I bet you'd find a lot more insider trading.
Also, the percentage that actually hits lit exchanges is much smaller than it was even 10 years ago.
I agree, but there's nothing technically stopping them from getting all the non-lit data. The question is...
They're just not, right?
Right. Being bad at your job and the job being impossible are two separate problems.
What a quote.
So if you were going to fix these things, if you were in charge of the reforms, what would it look like under the Austin Campbell regime?
So I would say a lot of it is the do better adjustment. Right? Because before we talk about changing laws, we need to ask, are we doing a good job with the ones?
So it's an enforcement question as opposed to a change in regime type.
Yeah, I mean, like
change.
If you want my hottest takes on reform, it's that we should about double or triple the salaries of most of our regulators, give them far bigger budgets for technology, but then also hold them significantly more accountable for outcomes. Right. And keep in mind, define the outcome properly. It's not the number of insider trading prosecutions. It's the amount of insider trading. So if you prevent it all, great. Right. And so to me, it's skilling up these people to do the kinds of things I just said, which is much better detection, much better monitoring, much better understanding of market structure. Throw all the people actually doing it in jail, and then ideally just have much less of it because people understand this is a one-way street to prison.
Yeah, I think this is actually, the more I have dug into different sectors of government, the more that this is consistently the only way to fix it.
Yeah.
And there's actually only one part of what I would sort of call like public sector employees that actually function like this. And the feedback loop is incredibly powerful and incredibly effective. And it is public university football coaches.
And basketball.
And basketball, right? But it is largely like it is these flagship and even like their second tier people at large public universities that are generally the highest paid people in government in general. But the contract, I mean, it's clearly possible because these contracts are written in such that they can be fired basically capriciously if they don't win enough times.
Yeah, and I would say we're diverting into politics here, but my biggest critique of the Democratic Party and their current stances is you keep asking for more money in taxes while doing an absolute trash fire level job of using the money you've already been given. I would propose the following fix. Cut all government budgets, federal, state, and local, by 50%.
How do we pay them more if we...
Well, hold on.
Okay.
Force people to iterate on that to see what's broken, because you're going to flush out a lot of stuff by cutting it that much, and then go back and rebuild with much better people and much better bureaucrats, right?
This is the Doge ideology, right?
It's the Elon Musk idea of cut until things break and then find out what's broken. But the reality is, like, say Mamdani in New York asking for more money. That's insane. We should cut the New York City budget because we're wasting a huge amount of money. We spend more money per pupil than almost anywhere else. And by the way, are getting worse educational results than Mississippi.
We spend 60.
That's actually because Mississippi is a miracle in what they've done in their education.
Right. But the point is, it wasn't about money. It was about methodology.
$60,000 a year per student, 49th outcomes.
Yes. You do not deserve more money. You all deserve to be fired.
$88,000 a year per homeless person.
Yes.
Which is higher than the median income in New York.
But I would also point out, let's go back to the problem. How much of that 88,000 goes to the homeless people? Let me give you a hint.
It's a jobs program.
Yes.
But not for the homeless.
Correct.
Yes.
Now that we've had lots of spicy takes. I'm so technically validated, pro-billionaire, pro-paying government more, anti-regulation.
I'm not sure I'm pro-billionaire. What's the right way to say this? If you got there by creating value for people in the world, I'm okay with it. We do need to do a better job of how we think about estate taxation, though, because passing on generational wealth forever is a different question. But, like, I bear no ill will towards Jeff Bezos, right? The world is better off with Amazon, and trust me, I lived before Amazon. It sucked. But on the other hand, if we're talking about like billionaire wealth, either through inheritance or market manipulation, those I have significantly more questions about. So traditional commercial billionaires building stuff that makes the world better, doing things like electronic cars or, I don't know, curing cancer, right? Or like building out America's infrastructure and schools, I'm totally down with. Financial manipulation and like dynastic wealth being inherited, no. So again, oversimplification of the problem in media.
As is usual.
Sad but true.
I want to get into a few of the other things that kind of you have done and worked on, as well as some of the other just conversations we've had about stuff that you kind of care about. I think we talked a bit on prediction markets. I want to go back to that topic because if you look at the volumes, like prediction markets did somewhere around $22 billion last month. I think they're at $20 billion this month already, and it's only June 19th. This is like a rapidly growing sector. There are obviously some concerns about insider trading. I think you could make a stochastic argument that the insider trading also washes out in the wash for any market that trades of a significant enough volume, which is a larger question on is insider trading a victimful crime or not. We can skip that one.
Wait. We should hit this one too. Does insider trading matter? Is it a crime? Should it be a crime?
So
we're hitting all the hot takes we possibly could in this episode. I just want to make sure we're on record on this one.
I will say two things about that as we think about hot takes. One of the problems you have with insider trading is it eventually creates an incentive to manipulate.
Yes.
So in that case, it is definitely a crime. Like sports betting where you rig the match is a great example of insider trading because you knew in advance it was going to happen. You traded in front of it and the probability was wrong. So
that's like a slippery slope argument. And I don't love those.
I will say
this is a slippery slope we've repeatedly observed in financial markets and have had to regulate repeatedly throughout history. So I'm pretty sure this slope is not just slippery, it's real.
Can you give us some examples?
Yeah, so
Enron.
Why do we have the securities regulation that we have in the United States at all?
Yes.
It's because if you look at things like pool trading and insider rings in the pre-1929 crash market, people were openly manipulating the market for profit by pumping and dumping things to take money out of the hands of retail.
This is why we're not allowed to trade onion futures.
Among many other things. This is also why you have all the disclosure and like exchange monitoring and like rules. But Point is, this is a recurring known problem throughout financial markets globally. I don't believe this is a slippery slope. It's just a slope. Like, we've seen this many times.
Sorry, what I mean by slippery slope is not that it won't end in a problem. It's that it itself is separate from the ultimate problematic outcome.
But not policing these things in a way that stops them from happening has historically always led to that outcome, right?
Broken
Here's my
windows theory.
objection to the slippery slope, right? You are hypothesizing that these things are true. And I am arguing to you this is not a hypothesis. I have plenty of concrete evidence, right?
I would agree that these things are true, right? But I think there is an interesting argument on these things. Like, for example, commodities trading.
Yes.
All of it's insider trading. Like, if I'm a farmer and I look at my field and I go, ooh, these soybeans don't look so great, I'm going to go hedge my bet. That is insider trading.
So I agree, but that has the important characteristic of somebody with a fundamental legitimate economic interest in hedging there, right? Like, here's a different one, hypothetically. The farmer in a year that's like mediocre goes, doesn't look great. Goes and puts a bunch of money on soybean crops being bad, and then burns their own fields and the fields of those of their neighbors.
Sure.
Right.
So crime.
But
Right.
I think this crosses what you were talking about before about like legal spying versus illegal spying. It feels like there's a certain amount of this stuff that is like
exactly. And so the way we regulate that right now is by having a whole monitoring regime. And if it is the farmer themselves hedging, we are willing to tolerate that amount of things. But if it were somebody like blowing up the farmer's field after putting shorts in, they would have a problem. But also equally so, if it were somebody like breaking into greenhouses to look at those things who did not have an economic interest and was not supposed to be there and then doing it, that's a problem.
Okay, so let me give you a posit then.
Okay.
Insider trading should be fined by employees of companies, but not by anyone who's unemployed by the company.
I
Isn't
think
that
in the
the same-
definition of insider trading, it does mention who has like privileged
So
information.
This
Right,
is back,
because-
but
Yes,
this
because
is
this is where we're going back to, like, I have, as an employee of a company, I have an economic interest in that thing, and I can be very bearish on what I see happening at the organization, and I want to hedge my RSUs.
Okay, so technically the argument should be, I'm going to clean up your argument so we can have the real argument,
Please.
that shareholders of the company should be
Shareholders,
allowed to
yes.
insider trade.
Yes.
Because non-shareholder employees insider trading, boy, is that a different kettle of fish than what you just said.
Sorry, I was assuming shareholders of the company, but yeah, we can extend this to anyone who has an economic and a direct economic ownership relationship
Correct.
to.
And then the problem you run into is the second one I was going to raise to Tori's question, which is if you start tolerating significant amounts of that, what you are telling people is if you do not have direct access to that information, you should not own the thing.
Yes.
Because you will essentially constantly be arbitraged against by the people with better information. And so what that means, your argument is essentially public stock should not exist.
Yes.
Should,
So
well, hang on. Is that not essentially what happens when you own a stock right now? Is that you're constantly being arbitraged against by people who have more information than you?
So the answer to that actually, so this is a weird one. It depends how you own the stock.
Right. Like
that
if
is
I am passively investing, if I have like, I don't know, a total market mutual fund, that's kind of just true.
No, it's actually weirdly not. Like, this is the Warren Buffett thing, because if I bought the stock once in 1980 and have done nothing all the way to the current day, I kind of get all the informational benefits of the insider trading. That's only a problem when you're actually going in and out.
Well, you get it if it's all good information. If it's bad information, you're in it longer than you should be.
Maybe, but again, if you are truly a long-term holder,
Okay.
Of
So now we're
stocks.
talking about long-term holders.
right, but I'm saying this is sort of the implication of markets that is super weird that we come around to is the problem that we've essentially like over-indexed on short-term liquidity.
Right. And so this is actually where I think things get quite interesting, because the argument of, oh, we shouldn't have public stocks, like a lot of this to me feels like we have created through regulation a problem which AI is running far ahead of our ability to police, which is this idea of like, if you actually go through USC, like US criminal code, and then you go through each state and local code, and if you actually have perfect observability systems able to catch every infraction, everyone's getting fined constantly every day for something. Most people are going to jail at some point in their life. We're soon going to be in a place where the social tolerance to enforce the laws we have on the books at the level they're written, and that the ability AI will give us to enforce them will not be acceptable to anyone. And I think insider trading falls into this same category a little bit because,
But Austin, I want to pause you.
Please.
What you're making, and by the way, I kind of agree with this, is an argument to fundamentally just rewrite the laws. 100%. We have too many, they're too complicated, and they're mutually contradictory.
Yes.
I think you could get to a trading framework that probably works better where insider trading is less of an issue, but it probably looks something like you don't have the ability to trade in and out of things at short-term intervals. Right? Like if you bought a stock and your minimum holding period was 1 year, I think that takes out, not all, but a lot of the insider trading problems.
What if we just put a 50% tax on insider trading?
I'd be okay with that. What if it goes to an insider trading fund for, I don't know, reparations?
Passive index fund holders.
And everybody just gets some of the money back at the end of the year.
It turns out there should just be an AI bot that has a direct API access to Nancy Pelosi's brokerage fund and mirrors the trade.
Perfect markets trade once a year, and we all make the same trade at the same time.
No, it's not that they trade once a year. It's more... Insider trading kind of relies on being able to time specific discrete events. So if you take that capability away, it's less of a problem.
I suppose so if you're talking about stocks, but not if you're talking about options.
Options markets in that structure become a thing where you have to ask the question of, should we even have them?
Well, yes, but I mean, the question I think is more, should retail be able to trade them?
Like a true degen. As a former options trader.
As a former options nerd, there are plenty of legitimate hedge cases for them.
There are, but
so should
to go back to Austin's point, if we're pausing and rethinking what is the framework in which we want to allow people to invest in markets writ large, right? That is to say, if we accept that most retail people are not informed and that most people who are not the most efficient markets people are probably being systematically disfavored, and we want to get to a better system, you probably end up in a world, Tori, where options should only be traded by the big guys, right? And only for significant types of hedging or legitimate purposes, which is going to make for a lot less dynamic and liquid options market.
Okay. So we're getting into something very interesting here. I want, there's a macro point I want to make, but I want to hang on that last thing you said, that legitimate interest. Yes. So I own some SpaceX stock. SpaceX now owns XAI. They own a bunch of stuff. It's in a bunch of different areas. Is my economic interest now allowed to options trade electrical markets? Because that is one of the biggest...
Can you expand the thought?
Sure. So the only input that matters, literally the only input that matters for AI companies' growth is the ability to get access to power.
True.
Chips are downstream from that. But if you talk to every AI company in the world, what they're limited by now is grid capacity and their ability to generate electricity, more so than supply of chips from, TSMC. And so I guess if we start putting some of these do you have a real legitimate interest? It reminds me a little bit of these weird laws we see in California that are if we find that you are not minority enough in a contracting thing, we can throw you in jail for having gone through you claimed you were a minority group, but you're not, and so now you're violating contract law.
Now let me roll back to a much earlier point we made, which is what I would say to you is that a healthier paradigm for U.S. equity markets might be if you want to own the thing, you just kind of have to own the thing and eat all the risk, and that's what you're getting paid for, right? That is to say, if you want to be outright long, and if you don't, and that should be a binary decision. And that the people who I think would have a legitimate case to do things like use options in that way are the people lending to SpaceX out of vehicles like banks that need to keep a par level to redeem depositors.
Yes.
Right. I might argue that forcing capital markets towards long-term acceptance of risk as opposed to short-term optimization might be a better capital market structure for long-term economic growth than what we currently have.
I would totally agree with you on that. I think where we differ is I think it's fundamentally unenforceable.
And that may be the case. And I'm not strongly saying we should do this right now, but I am saying it's an interesting thought experiment of what if you just had to be naked long stocks and could not trade them short term.
But then we just hedged them on Hyperliquid.
Yeah, tell us what you think about perps then.
All right, so ignoring the whole philosophical point on how should investing work, perps are a great product. Right? By which
Okay,
I
perps
mean,
do kind of slap though.
right, but by which I mean deliverable futures are a huge pain in the ass.
Yes.
So I used to clerk for a high frequency trading firm, and I found out the hard way what the maximum amount of legs that you can put in at a time on the NASDAQ is, and it's 267.
Yeah.
You're telling me.
I also know somebody who had to find some short-term storage for orange juice in Singapore. So
Well, that's why we had negative oil a couple of years
Right.
ago. That was so fun. But negative front month oil was really fun.
yeah,
I enjoyed it, at
deliverable
least.
futures, there's a good reason for many of them to exist. I'm not disputing their existence, but there's also a very good reason for non-deliverable futures to exist. And so I think perps are a product where if we accept the argument that it's okay to financialize and like make everything granular, like upstream of this, perps should definitely exist and have a lot of value.
Options bad, perps good.
No, I'm
Insider
sa-
trading,
I-
okay.
I'm saying if we're going to accept the current market structure, e.g. our preference is liquidity and everything at all times and fragmentation, perps are a very good product. Like you kind of have a macro thing on rules upstream of perps. So let me say, let's use a sports analogy here. Do we think the 3-point line is a good thing for the NBA or not? Is upstream of, do I think a 3-point specialist is a valuable player to have on your team? So if we're in the 3-point era, I'm super in favor of players like Steph Curry. But if we're in the 1960s with no 3-point line, I'll take Bill Russell. Thanks. And my point is we have two separate questions. One is what should the macro level rules of the game be? And then within those rules, how do you play it well? And I'm saying within the current rules we have, perps are great, but I'm willing to have a discussion about the rules.
Personally, I feel like the NBA should allow you to leverage trade your 3 points.
I
We
should
should
be
have
able to.
6-point shots, but if you miss, you lose 3.
Exactly.
That would make the game more interesting.
Like I'm gonna go levered long on Steph Curry.
I mean,
I think there's places you can already do that.
I
He misses
believe you
for 3,
can with
hits for
prediction
6,
markets.
but internalized to the score.
So sports betting does have prop markets like this, which essentially do function the same way. They're just really crazy parlays.
I would also point out to our earlier discussion, a lot of the reason that like betting markets are running so hot right now in the prediction space is the World Cup. Like this is just sports betting.
Yeah.
Is it? To my earlier point about, the jobs numbers and things like that.
Go look at the demonstrable volumes on Kalshi and Polymarket. A significant amount of the aggregate volume and increase of volume is sports betting.
Okay, I have a really spicy one then for you.
All right.
Do you think they should allow assassination markets?
No. I don't think that's a spicy take because that is
I think
the
they should.
That is paying people to assassinate
No.
people.
It's
It should not
putting
be allowed.
a price discovery on how much people want you to die.
Okay. But so long as we think murder should be illegal,
Right.
paying people to murder people is also illegal. Assassination markets, as the law is currently written, are probably a crime.
So what about death markets in general of when someone's going to die?
I don't believe there should be specific individualized death markets. I am okay with population mortality death
Okay,
markets.
so anti-taunting.
I am anti-tontine back to reinsurance because, like, we also have experience with how those work out. Right? It, as a general, like, social matter, even if you find the financial, like, aspect of it interesting, if the core existence of your market incentivizes people to break the law, you probably should not have that market.
Definitionally,
think that's
depending
a
on
fair-
how the laws are written.
Right? Like, because, like, where do
think
you
it's a fair
stop?
statement.
Okay, we had
Yeah.
death markets. That's like one thing that's obviously pretty grotesque, but like there are many other bad types of like crimes. Should we have like burning down cities markets?
Okay,
Should
well, what
we have,
about
what's the most odious market we could come up with? Rape markets? Like, where do you draw the line, Tori?
So I have one for you then. To go somewhere totally different, there is a rapidly expanding ecosystem of gray market Chinese peptides. And
Yes.
there are all of these websites that have sprung up to test them, do all this purity testing, make sure what you get is actually like what it says you're getting. Some of these companies have like a terrible track record, and some of them have like a really good track record. Should we be able to prediction bet like who's going to be the top of the FINRIC leaderboard?
No. I think what we should do is fix the fucking FDA so we can have a
That's a
legitimate
much
supply
bigger
of
lift.
regulated peptides. But this goes all the way back to the government should do its job. Like, all of these things are workarounds for broken systems. And my answer in many cases is stop putting Band-Aids on Band-Aids on Band-Aids on Band-Aids on Band-Aids and fix the problem.
So how do we fix the FDA?
I want to go back to exactly what we were discussing earlier, which is you probably significantly cut the funding because a lot of it is waste. You give it outcomes-based, right, like metrics, which are to say your job is to disapprove bad medicines and approve good medicines. And so if you fail to approve something quickly that's good, penalty. And if you approve something that's bad, penalty.
Penalty for
And then
whom?
we pay them based on that.
Penalty for whom? The person that actually just approves it?
Yes. They should have a direct financial interest in accuracy, right? Because if you think of the
Should
FDA...
they be able to insider trade the...
Should they be able to hedge their...
No, because you want them to be exposed to their own decisions, right? This is another argument against people hedging their stock, is you want them to actually care about doing their job. But like, back to that, this is again the brokenness that regulators also face, is currently the FDA gets yelled at constantly if they approve bad things, but they get no credit if they approve good things. So what do? They say no to everything and make processes that take forever. You actually need that forcing function to work both ways.
I do have so many other questions I could ask you, but if you had a magic wand for like one structural change you could make in any market over the next year, or any regulation even, I'll broaden it, what would it be? What would you do?
So I think there's two potential arguments here. And I'm picking these based on things where I have personal expertise and I'm relatively confident that what I would do will have a net positive outcome. Okay? Number one is to bring back Glass-Steagall. And I say that because if we have this too big to fail banking problem, the easiest way to do that is to break things back apart.
Make them smaller.
Yeah, and make people focus on the things they're good at. I think that would also fix a lot of our banking problems, because now you can't have a mega entity using the customer deposits to do hedge fund lending, right? Either literally or by cross-subsidization. So bringing back Glass-Steagall, I think, would be a good thing. I think it would also help a lot of the smaller banks who are having a very hard time competing and dying off constantly. So that's one. I think it would be very positive. The other one I would do is wave the magic wand to get rid of the BSA as it currently exists and replace it with a modernized, not solely KYC-based version of the BSA.
Also,
Right.
preferably something constitutional.
One,
Preferably.
constitutional, but two, actually does the thing that we want it to do, right? Because the current one is probably unconstitutional and doesn't solve the problem.
So what would
it's like
better
a
look
double
like?
whammy. I mean, I'll ask the question this way. For you two, who do you think knows more about you, your bank or Google?
Google, but that's because I tell Gemini a lot of bullshit.
Okay, but for almost everybody, it's Google. And the point is, a working version of the BSA would have much better structural identification of people that reveals less information at each point about who they are. Like, go into like social graph theory and zero knowledge proof disclosure. You would do that. But you would also combine that with open source intelligence operations to scrape a huge amount of things so that we could stop scam rings, drug traffickers, human traffickers, because those have observable behavior patterns that are more important sometimes than knowing the specific identity of people. So we would both have more privacy and more crime interdiction by modernizing the system. And by the way, you're never going to have absolute privacy and stop crime, and you're never going to like, what's the right way to say this? You could have a lot of crime if you had a lot of privacy, and you could trade both off with each other. But the balance point is important to think about, and we've done an incredibly poor job of that. So those would be the two.
Thank you for that.
All right. Well, I think that's about all the time we have today. But Austin, thank you for joining us today to chat about a whole bunch of different topics.
Well,
Really
thank
appreciated
you,
this.
Austin. And Tori, please change your name for the next one.
Okay, I'm going to be
You're really
Austin for
breaking
the
up
rest of
today.
the show. I am also Austin. Thank you so much, Austin, for coming on, and thank you, other Austin, for letting me terrorize your guests. And this was really fun.
Yeah. Austin, if people want to learn more about you, more about your company, read your blog,
Where should
can
they
they
go?
All right. So, one, subscribe for the Zero In newsletter. It's free. My creative director is totally insane. So, you're going to get wild stuff like Michael Saylor dressed like Sailor Moon or Elon Musk dressed like a fashion model holding a golden rocket. These are things that have actually happened. Shirley is amazing. You should subscribe for the newsletter. It's genuinely funny. It will always be free. Also, I'm probably on Twitter too much, so you can find me there. I am just Austin Campbell on Twitter.
Just Austin Campbell? Is that the at, or is it
No,
at
it's at Austin Campbell.
Okay, just checking for those listening at home.
This episode brought to you by NVIDIA H300s. Send us a box.
You know you're just getting a leather jacket now.
You haven't even heard about my pro killing old people takes.
No, I always love the looking around a plane and be like, how much risk is currently on this aircraft? Is it priced in? Probably not. We have seen a proliferation of cameras in the last 20 years. We have not seen a proliferation of Bigfoots.
The way the current wealth is concentrating in San Francisco and the way they all live in group houses there, the next thing everyone there is going to do with their liquidity is just buy houses for their group chats to live in, because some of the members of the so-called permanent underclass might just be really cool to hang out with.
We can brand this as the Mormonification of everything.
We'll call it the Church of Latter-day Saints. So tier 1, Google Talk and Brave Talk. They are superior to everything else. But by the way, the only one of any of the video conferencing softwares that doesn't spy on you is Brave.
What about Jitsi? Jitsi doesn't spy on you.
Keep believing that.
Okay.
Just below that is Zoom, because look, listen guys, it exists. Below that is Microsoft Teams, which I personally regard as an insult when you send it to me, but one at which I will still be friends with you. Then at the bottom is WebEx, where I just immediately block your email address when you send me one of those.